Morning everyone, many thanks for joining today's Academy Governance webinar. I'm Catherine Patel, I'm a partner in Buzzacott's charity and not-for-profit team, and I'm joined today by my colleagues Catherine Biscoe and Hugh Swainson, who also are partners working extensively with the Academy sector. So if we just look at the areas that we're going to cover today, around the governance for Academy Trust. So I'm going to start off with an introduction and some scene setting, and then Catherine and Hugh will then both cover some case studies, really to bring this a little bit more into real life and to give you some tips really on areas so that you can understand how to deal with certain areas of governance and certain areas of risk. We're going to be about a 1 hour session in total, hopefully time at the end for some questions and answers. It might only be a relatively short time, so we will respond after the webinar. We'll circulate the slides and we'll also respond to any questions that we don't get a chance to respond to today. So please ask questions as we're going through. You're automatically on mute for the webinar and your videos are off. So if you use the Teams function, the question function that's on the right hand side of your screens, you can ask questions as we're going through. The questions won't be shared with all attendees, but we'll be able to see those. And as I said, we'll respond to those after today's webinar if we don't get a chance to respond to them within the session itself. So let's make a start, and really, as I said, I'm going to start with some scene setting in terms of really what is it that dictates the governance of an Academy Trust, and there are numerous documents here that are relevant, both from the sort of the public sector side, the education side, and also from a charity perspective as well. So if we just move on to the first slide and look here at really the role of the board as is set out by the DFE. So the DFE has a governance handbook, so obviously very relevant for educational institutions. The latest update to the handbook was in October 2020, and within there the DFE identifies 3 core functions for governing boards, so really setting the scene at that very high level, and those 3 core functions set out here on the slide. So firstly, ensuring that clarity of vision of the trust, the ethos and the strategic direction, so that overall aims and objectives of your Academy Trust. It's also about holding the executive team, the executive leaders to account, both for the educational performance of the organisation, of the trust, and also the performance management of your staff members as well. And that's the broader staff members, but obviously really they're looking at the executive leaders particularly as well, and how they work with the broader group of employees of the trust. And then finally, overseeing the financial performance of the organisation, and a number of these this area is really the area that we're going to focus on today, but also slightly more broadly than that as well. But that financial performance, making sure that strong financial controls, making sure that money is well spent by the organisation. So here looking at the value for money, impact, outcomes of the trust. So if we just dig into that a little bit further and understand really some of the varying elements of the demands of regulators relating to governance for a trust. So at times competing demands of the regulators, the DFE via the ESFA really being the key body here, being your principal regulator. But actually, because the trust is an exempt charity and company limited by guarantee, you also have to comply with the charity law. Charity Commission has a lot of guidance documents here, many of which are replicated within the DFE's guidance as well, but nevertheless, the charity side of things being really important for an Academy Trust. As companies limited by guarantee, you also have to comply with company law and filings, etc., with Companies House as well. And then very much on the educational side of things, you have Ofsted, for example, making sure the academic performance, the safeguarding is there. So as governors, as trustees, of an academy trust, really key that you understand the requirements of all of these regulators, particularly relating to the governance of the trust, drilling down into financial and other areas as well, risk management, for example, being one of those. So if we just then go on to, first of all, the Charity Governance Code. So not specifically applicable to academy trusts, and not designed for educational institutions necessarily, but many of the themes within the Charity Governance Code are very applicable to an academy trust, and we can see those themes coming through in other guidance documents and are referred to, for example, within the Academy Trust Handbook. So many of the phrases here, the terminology used, you will see very much elsewhere. Charity Governance Code was set up by a charity sector steering group. It's not mandatory that this has to be followed by charities, but really does give some useful guidance around some of the themes of governance for charitable organisations. It's been updated relatively recently. The point 6 here previously was just referred to as diversity. This now is equality, diversity and inclusion. So more focus coming through in the ED&I side of things, and they've also expanded on the integrity side of things as well for the Charity Governance Code. So in terms of some of these areas set out here, just to give you a little bit more depth on some of these areas and things that the board in its governance should be thinking about. So in organisational purpose, this is looking at your vision, your ethos as a trust, the aims, having a strategic plan with agreed outcomes. So that overall purpose of the trust, the educational purpose, and what you want to achieve as board members. In terms of the second point here, leadership. So this is really emphasising that collective responsibility that you have as a board for leading the organisation. So really that the values of the trust are being reflected in the work of the trust and in the way in which the board is operating. And that as board members, you are committed and have the necessary time available to commit to ensuring good governance of the trust. The integrity aspect is that promoting public confidence within the educational sector, within the trust, and always acting in the best interests of the charity, of the trust in this instance, and the pupils, the beneficiaries of the charity, of the Academy Trust. Also very important here, and we'll hear more later, is dealing with and managing conflicts, potential conflicts and conflicts of interest, particularly where these are arising at trustee and board level. And then the fourth element here on decision making, risk and control is something that comes across really strongly in the Academy Trust Handbook. So this is all around the framework for decision making, monitoring of the work that the trust does, clear delegation and internal control frameworks as well, with reference to risk management, audit and assurance. So a lot of these themes very much coming through for the academy sector in the Academy Trust Handbook. Board effectiveness, again, something that the DFE heavily focus upon, the ESFA focus upon in the Academy Trust Handbook in terms of governance reviews. And in this year's Trust Handbook, they've really emphasised the value of external governance reviews. So how effective is your board? Do you have a strong composition, a mix of skill sets, leading into diversity as well? How do you address the diversity of the board as well? And that you're working as an effective team, and that the board is continually learning and developing over time. I mentioned the ED&I side of things, so the principles of equality, diversity and inclusion very much being embedded in the trust. This is probably something in an area that many charities, educational institutions are really working through at this point in time, but that the board is assessing how well it's doing in these areas, and transparency in this area as well being really important. And then finally, openness and accountability, which I think goes without saying, but again, really emphasised here within the code, and also, as we'll see, emphasised very much in the DFE's governance handbook as well. And really this is openness and transparency with all of your stakeholders, with appropriate communication with all of the relevant groups. So we'll see, if we turn to the next slide, we'll also see many similar themes, and apologies, this is quite small in terms of text, but this is lifted from the DfE's governance handbook and competency framework for governance. So you'll see here many of those common themes that were coming through in the charity governance code are also reflected in the DfE's governance handbook. So that focus on strategic leadership, having values, the decision making, strong risk management, accountability, very much focusing here in terms of the financial accountability, but also educational improvement as well. How does the board work to ensure all of these themes here are being met, and that you're working effectively as a board? And again, that sort of evaluation aspect comes through here as well, working with the people within your organisation. So if we just turn on to the next slide, really the key document here in setting the scene and really which the various governance codes feed into, as I've already mentioned, is the ESFA's Academy Trust Handbook. So the latest handbook came into being from the 1st of September 2021. And this is for all academy trusts. It's critical that this is followed by a trust and that the board members are fully conversant with the requirements of the Academy Trust Handbook. Many of these themes that I'll mention now will be seen as examples within our case studies shortly as well. So you'll see how some of these themes come to life in real examples. So what does the Academy Trust Handbook aim to do? It is really ensuring that the board members particularly understand their role and responsibilities, and how that drills down into some of the very specific requirements that the ESFA have in terms of reporting and monitoring activities of an Academy Trust. So they start off in the handbook, for example, by setting those roles and responsibilities, defining them in the context of a trust. So the membership, the trustees, and the trustee discussion here repeats a lot of what is already in the DfE governance handbook as well. The role of the accounting officer, chief finance officer, and also the clerk. And actually in the 2021 handbook, the clerk is now referred to as a governance professional, and the handbook is saying that a governance professional must be appointed. Excuse me. And this is really ensuring that there's transparency as well around the governance arrangements. So as a trust, you should be putting details of your governance arrangements on your website, making sure this is really clear to the outside world how you're structured and how the trust is governed. Mention of the Audit and Risk Committee as well, and this is really relevant for a lot of the sort of the audit and financial areas, particularly the audit and risk management side, as the name would suggest. So a trust has to have an Audit and Risk Committee if they have income of over 50 million per annum. If it's a lower level of income below that 50 million threshold, they can merge it with another committee, so the Finance Committee. If you've got two separate committees, the 2021 handbook is saying that the chair should not be the same for both committees. There is a Treasury Audit Committee handbook as well that you can refer to if you're on an audit committee, chair of an audit committee. That's quite useful to really look at some of those sort of roles and responsibilities. The Trust Handbook then goes further in terms of looking at those accountability, the financial requirements, so that trusts have the internal control framework, a scheme of delegation, strong financial planning, so from the budgeting, management reporting, reserves management, all covered here, and that you have systems in place, procedures in place for procurement leading to value for money. So this is looking at setting executive pay as well within this section. And equally that you have policies, clear, transparent policies in place for whistleblowing as well. If anybody within the trust had concerns or outside the trust, that you have those whistleblowing procedures. So if we just turn to my final slide, just on the Academy Trust Handbook. So the other areas here, just to mention, where the Trust Handbook is really quite prescriptive in terms of what trusts need to do. The requirements around internal assurance and scrutiny, so the review of systems, controls by somebody probably external to the trust. 2021 handbook emphasising that this must not be completed by a member of the senior leadership team, and that it should be driven by the Audit and Risk Committee and through the risk management process as well. Where do you need to seek that assurance? Risk management emphasised very much in the handbook, so as board members making sure there are strong risk management processes. Also, the handbook this year recognising the increasing risk and how common really cybercrime is becoming, and there's further cybercrime guidance in the handbook this year. The ESFA are really hot on managing conflicts of interest and related party transactions. It's a really key area for them, so strict rules within the handbook on which transactions should be reported to the ESFA and those that need to be approved in advance as well, in terms of related party transactions. So quite a lengthy section there in terms of some really quite stringent requirements. Also, the ESFA approval for certain types of transactions. So, for example, non-contractual severance payments over 50,000, you need to seek approval from the ESFA. There's a really useful table in the 2021 handbook, I think it's page 56, a summary of the freedoms and delegations that Academy Trusts have. So a really good reference document for board members and leadership team members. External audits obviously covered within the handbook as well. So in terms of the appointment, selection and review of your external auditors, and also sort of that emphasis on the use of professionals, the external governance reviews, as I mentioned as well. And then very finally, something that's sort of more specific to the public sector rather than charities, but very much applicable to the Academy Trust sector, is regularity and propriety. So the review that we would do as external auditors, the statement in the accounts made by the accounting officer and also the auditors around regularity and propriety. So the checks and the ensuring that the governors and the board members ensuring that the use of government funds is happening appropriately, that there are controls and systems and processes around that, so that your spend is proper, not fraudulent, and regular in that it is in line with the expectations of the government when giving those monies. So that was a pretty quick canter through some of the sort of the scene setting and some of the documents that really will feed into the case studies today. But I'll now hand over to Catherine, who'll start with our first case study.
Thank you very much, Kath. So yes, as I said, this next part of the session, we're going to be looking at financial management from a governance perspective in particular, and we will do that by going through a fictitious case study. So really, you know, I'll set the scene for that, then we'll sort of explore maybe some of the things that went wrong in that example, and really sort of finishing up with looking at some best practice points that you can take forward. So if we just turn on to my next slide, this is really sort of setting the scene for the case study. It is the Raising Achievement Trust, and this is a small 3-school MAT. So it was established in 2011. The largest of the current 3 schools was the initial converter into the trust, and then there was 2 further schools that joined in 2013. And really then the timeline on this slide sort of begins really in 2019. So at this point, the 3 schools in the trust and all rated good by Ofsted at this point in time. Also, just to note that the executive team had been in post since inception. So when the initial school converted, the head teacher became the trust's CEO, and also the business manager took on the role of the CFO for the trust. And then looking at the governance side, the board makeup also hasn't changed significantly since 2011. So the current board still includes sort of quite significant representation from the 3 schools' predecessor governing bodies. The financial position of the trust has always been quite tight, so they've got minimum reserves, but they've always been able to prepare balanced budgets for the ESFA. They've been able to sort of prepare their statutory accounts, and these have always been submitted on time. However, of late, the financial position has become a bit more challenging. So we're looking at sort of September 2019, due to change in demographics. There's a fall in roll at a couple of the schools, and obviously this is then having that impact on funding and making things a bit tighter from a financial perspective. However, the initial converter school, that still continues to do well in terms of sort of pupil numbers and waiting lists. And in fact, they're thinking about expanding their 6th form provision, and as part of that they will require sort of a bit of investment in a capital project. So that's sort of the background there to the Raising Achievement Trust. In February 2020, the trust goes through a tender exercise for its external audit function, and they do this following the guidance by the ESFA at the time, which was driven by the revision to the FRC's ethical standard on separating the providers of external audit and internal assurance providers. So following that exercise, the sort of incumbent audit firm, they remain as the chosen provider for internal scrutiny, but a new audit firm comes on board and they're appointed as the external financial statements and regularity auditors. So as part of this appointment, the transition and onboarding, the new firm are keen to sort of get stuck in and carry out an interim systems visit over the summer period in 2020. And following this visit, they draft an interim report with their findings, because they do have some significant findings and some areas of concern which they wish to raise to the trust's attention. So their findings include the fact that the trust has purchased services from 2 companies which are should have been classed as related parties. So here the auditors are flagging that there's a breach of the Academy's financial handbook as it was then before it was renamed the Trust Handbook, and also the Trust's own sort of policies and regulations. There wasn't any evidence that they could see of proper procurement process being followed or managing conflicts of interest. And indeed, for one of those transactions, prior ESFA approval should have been sought. There were also a couple of further issues with following procurement policies, so not necessarily an issue with related parties, but again, just failures in following those procurement and value for money policies. And then a key point that they raised were really just at this stage some initial concerns over the quality of the financial information and the forecasts which they'd reviewed as part of the work. So they didn't think that they included sufficient detail on the full costs of the proposed capital development, how that was to be funded, or indeed enough detail on the assumptions behind pupil numbers. And the variance analysis wasn't very thorough, so there wasn't really enough information really being provided on the differences between actuals and sort of budget. Because there was no planned meeting of the Audit and Risk Committee due following this interim work, the external auditors drafted their report and they asked the executive to share their findings with the committee members and said that they would make themselves available for an out of schedule meeting, so to go through findings. But this wasn't taken up by the trust at the time. So then, following the summer, the audit was due to start the main audit fieldwork in October, as usual. It did have to be rescheduled initially due to delays. The finance team was experiencing issues with pulling the draft accounts together and getting all of the supporting documentation ready. And indeed, then when those draft accounts did become available and sort of were shared in November, they showed a deficit position. So this was quite significantly different to the balanced budget that had been initially prepared, and it was also quite different to the most latest set of management accounts which the board had seen. The main audit fieldwork then did eventually start. There were still some sort of delays, and the finance team did struggle to sort of pull the relevant information together. And eventually the auditors reported that they were unable to obtain sufficient evidence to support the trust's assessment of going concern and sort of ongoing financial viability they obviously also flagged in their report the sort of regularity concerns around the conflicts of interest and value for money points that were noted earlier. So then in the new year, the ESFA issues a financial notice to improve, as it was still called then, due to this deficit position and the inability of the trust to provide those final audited accounts. So that's the sort of the case study, the sort of rapid demise, unfortunately, of the Raising Achievement Trust. And if we move on to the next slide, we'll just spend some time going through, what sort of areas perhaps went wrong there. And of course, this is a fictitious example, probably very exaggerated. And in reality, so many red flags wouldn't have gone unnoticed, I'm sure. But I think it's just a good case study really to illustrate the importance of effective governance oversight, and in particular making sure that financial information and audit findings are properly interrogated and challenged. I think the case study here is implying that perhaps the board has become relatively comfortable. So it wasn't really best placed to react when the financial position started to deteriorate or when the new auditors raised their initial concerns. So we'll sort of go through some of the points on this slide in turn in a bit more detail. And the first one there, obviously quite key, the quality of financial reporting, budgeting and forecasting, as Kath was talking about earlier. The scenario here is that in the past, the trust had been able to prepare all of the required financial information, but when the new auditors come on board and take a look, they raise concerns straight away about its quality. And obviously in the example, then this sort of unwinds relatively quickly. And when the August 2020 accounts are prepared, they do sort of show that deficit position which wasn't expected. So if these accounts weren't of good quality, then what is good quality? What does good quality look like? What sort of things should you be looking for and sort of asking when you're reviewing management accounts and forecasts? So management accounts and budgets need to be presented in a way that is understandable, that will sort of enable you to make decisions, considered decisions. They should set out very clearly what the key assumptions are that are being used and that sort of substantiate those figures, and they should highlight what the risks are to those financial forecasts and potentially include sensitivity analysis. You need to have information that enables you to understand what these risks are and at what point are they materializing, or do you need to sort of change what you're doing. So in this case, for example, maybe around pupil numbers, some sensitivity. Also, what level of sort of income uncertainty is there within those budgets and forecasts, and is there enough sort of flexibility or scope within the financial model to then sort of take account of that income uncertainty? So again, coming back to the example, maybe around the level of funding that was yet to be secured for the capital expansion, was there enough information there for the trust and the committee? So really, as a board, you want to be receiving sufficient information to be able to understand the bases for the budgets that you're approving, the risks that are part of that budget, and also, of course, then the quality information throughout the year to making sure that you can see how your actual financial performance is varying to actual. We then have the next point, which was around tendering and sort of procurement and value for money. And in this example, the trust did appear to have a procurement policy which was in place, was in line with the ESFA's handbook and guidance, and indeed, I'm sure, was followed effectively, for example, in the sort of external audit tendering exercise. However, there were a number of issues and instances of non-compliance that were flagged by the new auditors during their work, and that included the transactions with two related companies. So, as Kath was saying, dealing with any sort of conflict of interest continues to be a key focus of interest of the DFE and the ESFA. This case study doesn't go into the detail of what those sort of related party relationships were, but I'm sure you're all aware of what they could be, and you will have seen numerous examples of these when things have gone wrong in ESFA investigation reports, for example. But it is key. You need to be aware as a board of where the conflicts potentially are, so through declarations of interest at sort of meetings, but also obviously completing the full registers that need to be published. And importantly, management and the finance team should also be aware of any such conflicts, because it will be them involved in the detail of the procurement exercises. I think in particular, as trustees, being mindful of interests and related parties when you're making decisions around high value projects. And of course, also, as Kath said, the ESFA thresholds there, making sure that you are aware of those. The next point I had was around key management personnel. I think what I'm sort of alluding to here really is, in the case study, the executive team was sort of long established, linked still to the initial converter school, and there's the sort of the implication, I suppose, that perhaps their performance isn't sufficiently challenged by the board, maybe. So there could also here be a question maybe as to whether the CFO has the required skills. So, you know, in particular with regards to the level of financial planning required to support the planned sixth form expansion, or to deal with a significant capital project which isn't fully funded. And Hugh will talk a little later in a bit more detail about the roles of CEO and CFO and the interaction of these with the board, which is key. And then board effectiveness, so the board themselves, and Kath talked about this already in the scene setting and the guidance. So in this example, as well as the executive being long-standing, the board have also been in place for a long time, and still include a number of members from the school predecessor governing bodies. And while this isn't a bad thing, you know, it's good to have that local representation. I think the suggestion here is perhaps that the board should be doing more to sort of review its effectiveness, make sure that it does have that sort of appropriate skills mix, and that it is sort of you know, best placed to be making the decisions for the MAT in its current form. You know, for example, the expansion into sixth form provision, do they have you know, the appropriate skills on the board? There's also the suggestion here that the board and its committees are not providing sufficient challenge to the executive, or indeed asking enough questions of the assurance providers in the past. There's probably a question mark there as well. And importantly, I think this is key, that when they are presented with the new auditor's interim findings report, there's a lack of urgency there, perhaps a reluctance to deal with those issues head on. They didn't take up the meeting, the offer for that meeting to review those in detail. So unfortunately, in this sort of rather exaggerated case study, then these concerns over financial management sort of unfold very quickly thereafter. So those are the kind of the key findings in terms of what went wrong in this example. If we move on to the final slide in my session, we've got here just some sort of best practice points to take away. So obviously, as I said, case study rather exaggerated, but I think you will see a number of best practice points that we can draw from the above scenario, linking back to the guidance that is based on, which Kath was talking about. And, you know, best practice points which are important, I think, for every trustee, for an academy trust to bear in mind, and making sure that they are able to fulfil their duties. So looking first of all at financial oversight, obviously this is key, and at its core, really, this is about challenge and asking the right questions. So, you know, the management accounts, the forecasts that are provided by management, obviously these are key to you being able to carry out your role, but do you have all of the figures that you need to sort of draw a conclusion about the financial position and performance of the trust, the sort of future outlook? If you don't, are you asking why? Are you going back asking for more information? Do you know from the figures you're presented, what are all the key projects that are ongoing? What are the risks to those projects? Are there any issues with sort of staffing, sort of shortages or pressures, pinch points? Do you know what the reserves are, both at a trust level, but also at an individual school level? How does that compare to sort of annual income and expenditure? You know, therefore understanding what flex there might be in that budget. If there are any imbalances or any issues with individual schools? Have these been identified? Do you have plans in place to address them? Are these viable, and are you keeping on top of monitoring whether you're on track or not? And are any unusual variances in the management accounts sort of an indication that there might be some irregularity or some failing in financial health that needs to be picked up on? I think also at the broader level, of course, the trust policies and processes, and these should be reflective of the underlying guidance, as Kath was mentioning earlier. So are they fully compliant with the trust handbook? Have you taken account of all of the must requirements within that handbook? Have you also looked at all of the should requirements and at least considered these, even if they're not all implemented as part of your procedures? Do you have a system in place to make sure that these policies are reviewed and kept up to date, and in particular annually updated for any changes coming through from the ESFA? And obviously all of this needs to be considered within the wider context of risk. Has a full sort of risk assessment been carried out to sort of flag any weaknesses or any areas of concern within the financial management structure of the trust and its financial operations? And if so, then what plans do you have in place to sort of address these? So you may want to sort of engage some particular internal scrutiny on a particular area for some more detailed review. You might need to provide some additional staff training, or indeed bring on board new staff with a different skill set if a gap is identified. You might want to do a deep dive review by one of the committees of the board or a group of trustees and bring those findings back. Of course, risk is a topic in itself and much sort of broader remit than just financial management and oversight, but I think it needs to be the financial oversight considered within the context of risk. And at this point, I will talk about the broader aspects of governance. Hand over to Hugh, who will run through another example.
Thank you, Catherine. I'm going to go through a second case study now, and again a fictitious case study, but this one looking away from some of the financial aspects and into some of the broader areas of governance. So let's go straight into the case study on my next slide. This one is an example of a single academy trust, and this one's called Sleepsville School, a secondary academy trust. This one, we start back in 2018 when the school's running very steadily. It's got a good Ofsted report, and they've got a well-respected head at the school. The board members are long-serving, and also the business manager has been very long-serving at the academy trust. So very stable academy trust. And the story really begins in 2019 when the chair of the resources committee steps down after a long period of appointment. And so they go out and appoint a new trustee. And the new trustee they appoint, she's from an audit background and takes up the chair role of that resources committee. Now, it turns out that the previous chair was actually doing what equates to responsible officer checks as part of the internal scrutiny of the trust up to that point. So one of the first tasks that the new trustee has got is to look at appointing an internal scrutiny function. And seeing what was in the financial handbook at the time, she thought that it was best to get an external provider to do it, and that the old responsible officer method wasn't really appropriate anymore for them. So she did the usual sort of beauty parade of potential candidates and then appointed an internal auditor. They started their work in February 2020, much broader scope for this. So one of the things they first started on was cyber security being an important risk that was emerging more prominently at that time. And so the first audit visit was completed primarily with the business manager and also the IT manager. The business manager, having been there for many years, had got quite involved in some of the other support functions as well. And there was quite a lot coming up on this audit, so there was quite a lot of robust debate between the internal auditors and the business manager, who really was a bit unhappy with the process. He felt that some of the points raised were excessive and didn't reflect the context of the Academy Trust and were perhaps more appropriate for a big multi-academy trust or a different organisation. He certainly felt that they hadn't had any problems with cybersecurity in the past, so this was all excessive. The reports then went to the Resources Committee, who reviewed it. They saw the report, did have a lot of red on it, a lot of high level recommendations to deal with. The internal auditors didn't attend that committee. The business manager did, and voiced his concerns to the committee. The committee took the report. They also had some concerns about the amount of red on the report, because they saw that this ultimately is part of the annual summary report that would go to the ESFA, and might this be a bad reflection on them and a bit excessive in the context. But they did also recognise that cyber was an important area and needed to be looked at carefully. And the business manager did concede that, you know, there was probably a bit of bringing up to date of systems in this area. So despite a bit of disagreement, the new chair managed to get agreement that they would take action on these points going forward and get an action plan to deliver against them. So this experience of this first report and some of the wider things that the new chair had been seeing made her feel a little bit concerned, and she did go and speak to the chair of the board around these issues. The chair, as I say, was very long-standing at the Academy Trust and was quite a dominant character, a sort of alpha male character, and was very involved in everything as leading the trust at a board level. And she found he was a bit defensive on some of the issues that have been raised and felt that they were running the trust well, things are not going wrong, and these recommendations were potentially over the top. So she came away a bit disappointed from that meeting, but nonetheless they had an action plan and they carried on. And then the next visit that came from the internal auditors focused on estates and good estates management in schools and physical security over assets, that kind of thing. And again, the same thing happened. The findings caused disagreement, this time the premises manager and the business manager, and they felt they were disproportionate recommendations. This time, the chair of the committee requested that the internal auditors come to the committee and report their findings, as well as the business manager being there. And this made for a rather tense meeting. The internal auditor reported back their findings, but again, the business manager felt they were over the top, resisted the findings, and the committee was still concerned about the amount of red in the report and the implication of this all going to the ESFA. And the chair found it increasingly difficult to work through systematically on the points and get an agreed action plan. There was a lot of resistance in terms of the costs that all these recommendations would take to implement, and the very busy staff and the concerns around that. So ultimately, they did eventually agree an action plan, but it was a very difficult meeting. Subsequent to the meeting, the internal auditors resigned from their post. Speaking to them, she found out that they'd found a very difficult time and found it very difficult to provide the service in an independent service effectively for the trust, and they didn't think it was possible to continue with their service. She felt slightly apprehensively that she needed to, have another one-to-one with the chair to kind of chat through these issues. And again, she found the same thing, very defensive from the chair's perspective, and even sort of implying that the trust was running perfectly well previously, and she'd sort of brought about some of these issues by appointing this internal auditor that clearly wasn't appropriate for the trust in its context. After this, she felt her position was not tenable anymore and resigned her position. Ultimately, there was a whistleblowing allegation against the trust, and the ESFA investigated. They did see the reports and find a number of weaknesses at a governance level and with some certain controls. They didn't issue a financial notice to improve. They stopped short of that, but did require a number of improvements around a number of areas for the Academy Trusts to make. And they started sort of talking about the potential for joining a MAT that might help solve some of these challenges. The chair was very disgruntled about this, but didn't have too much time to worry about it because unfortunately then Ofsted came in to the trust. Mixed situation from Ofsted. In some areas on the teaching and learning, the trust was holding up very well, but ultimately they got an RI grading when they fell down on aspects of leadership and governance and some of the sort of controls, particularly around safeguarding, which is a particularly important area for that visit. So it got graded RI. Further things kept coming out of the woodwork at this point. There were bullying allegations and other things, and ultimately the chair had to resign from their position, and a number of the other trustees stepped down at this time, leaving a void in governance, at which point the trust needed to go into a multi-academy trust and did so. So a difficult ending for this secondary school. So let's have a look at what happened there. So if we go on to my next slide. One of the key things you'll see from this case study, there was clearly a sort of culture problem at a governance level in the trust. The chair being overly dominant was obviously impacting things. Obviously from an EDI, equality, diversity and inclusion perspective, things weren't working well there. There was also a lack of focus on compliance at the trust. They felt they knew best, and you know, whilst the chair may very well have had a point about over-regulation or anything else, the fact that they were sort of voicing that regularly was meaning that the culture in the trust was that people didn't give enough focus to those compliance aspects, and they were becoming out of date and non-compliant. So for the trustees in this trust, they weren't ultimately feeling energised by their role as trustees. They weren't engaged in the vision and strategy of the trust, and they weren't keeping things accountable, getting that reporting to try and ensure that the trust delivered in that. The trustees needed to be more engaged and energised by their role. We've got this concept on this side of support versus challenge, which actually in this case study was quite a difficult scenario because the business manager had been very long serving, people knew him at the trust, and the internal auditors were new, and they very could well have been overzealous. We do see scenarios where that happens. So that was a possibility. In this case, the internal auditors were robust, but they were very valid in the points that they raised, but difficult for the committee to get that perspective. So it's difficult for them to tread the right balance between support and challenge in this scenario. But we'll have a look a little bit later as to how they could have been a bit better informed in order to understand that. But the concept here ultimately is that you need both support and challenge. If challenge is obviously crucial to questioning what you're seeing as a trustee, but if all you've got is challenge, you can create a bit of an adversarial relationship, whereas if all you've got is support and no challenge, you're kind of cheerleading for the CEO, and if you've got neither, ultimately you're just abdicating. So it's important that both those things are there. On to the next slide. Looking at some of the key relationships at board level. Lots of different relationships that are important. I'm just going to concentrate on one of them, which is this triangle between the chair, the CEO and the CFO, the Chief Financial Officer. The Academy Trust Handbook over the last couple of years has really emphasised this role and the need for an appropriately experienced and qualified person in the CFO role, and someone that's sufficiently senior to have that influence at the trust in the CFO role. And this triangle wasn't really working effectively in this scenario, probably because of the dominance of the chair. The others had relaxed a bit and knew how to deal with him, but didn't want to try and engage too much in building the relationship. So it had sort of ebbed away over the time. And you'd have noted from the case study that the CEO was probably a bit absent throughout this whole process and was focusing on other aspects at the trust. So those relationships need to be strong in order to protect the trust and make sure everyone's adequately informed. Over on the next slide, I highlighted the importance of compliance. As I said, the chair wasn't focused on compliance, but ultimately academy trusts operate in a highly regulated environment, so it's just necessary as part of the business, if you like, to have a focus on compliance and to give that priority. And in this slide, we're looking at the Academy Trust Handbook. But obviously there's loads of other compliance you've got to deal with, GDPR, safeguarding, all the rest of it. The Trust Handbook, in order to oversee that, obviously the trustees need to have some understanding of what's in the Trust Handbook, some training on this. It ultimately does focus on governance and accountability and finances, so it is an important thing for people to be familiar with. It does get updated every year, so it is suitable for trustees to understand what the updates are, because it affects their role and how the trust is dealing with that each year. And obviously in this case study, the trustees hadn't had that engagement with the compliance aspects. Over on the next slide, and my final slide, this is looking at some of the key aspects of oversight. And I said for this scenario, it's a little bit difficult for the trustees because they weren't quite sure whether the internal auditor was being over the top. And on the left-hand side of the slide, we've got this idea of triangulation. Where do you get your information from as a trustee? And a lot of it, and one of the most valuable areas, is reporting from the executive, getting good reporting from the executive, having good conversations which enable you to understand what's going on. But that can't be the only way. There's also got to be what you see for yourself, either by visiting the school, speaking to people, seeing what comes out from the school, so that you get your own picture of what's happening from the school, so that then you're a bit more informed when you're being reported to by the executive. And then obviously there's independent reporting, which in this case was the internal auditor. There's other sources of independent reporting that you can get to give you that independent perspective, which is important as well, so that you're not just getting everything from the executive, you're getting a broader view. That may have enabled them in this case to know that there were significant issues there, and then to push a bit harder on dealing with some of those earlier on. And then we've got this concept of 3 lines of defence. This is sometimes presented slightly differently in different publications, but the underlying concepts are the same. So you've got these 3 lines of defence to make sure things are basically not going wrong. So you've got your internal controls and policies. That's the foundation at the bottom there. So any transactions or events are covered by policies and controls to make sure that they're done in the proper way. If that's all done perfectly correctly, then you're fine, but obviously not everything does work perfectly, so you've got a lot of monitoring and reporting at a management level and oversight level on top of that to make sure things are going correctly, whether it's on management accounts, other information that you get to monitor to make sure those controls and policies and everything is being applied. But then on top of that, your final layer of defence is that sort of independent scrutiny, in this case internal audit, which gives you that independent view of things. Obviously, in this scenario, that was quite important, that independent view, because there were lots of gaps. In other scenarios, if those first 2 lines of defence are working really well, you may have less coming out of the internal scrutiny, but it's nonetheless important for the board to get that assurance independently. So they can get the right perspectives, and also to look at risk-based areas and areas that are potentially new or there's changes at the trust to make sure they're getting assurance in the areas where they need it. So overall for this case study, we did see a scenario where the governance was getting worse over time. Trustees weren't engaged in the roles sufficiently, and the dynamics weren't working well, which takes us back to what was said earlier around why the ESFA is pushing this sort of governance self-assessment, governance reviews, to make sure that trusts don't get in a situation where the governance degrades over time. It's constantly being reviewed and re-energized and made sure it's up to date. So that's everything from the second case study. I'm going to hand back now to Kath.
Many thanks, Hugh. That's great. So we have just 5 minutes for some questions and answers. We've got a few questions that have come through. We've probably got time, I would have thought, for about 3 of those. So maybe if I take the first one that's come through. So this is a question around having a pay committee. So the question, or the point raised, is a recent SRMA visit raised a question about a pay committee. We believe we cover this sufficiently with the Finance Committee and Trust Board and cannot find a must-have requirement. And really, what is our view on that? So there's the DFE document, the Academy Trust governance document that looks at structures and role descriptors, does say that a remuneration committee is an optional committee, so not a mandatory requirement. However, having said that, we have seen pay committees, remuneration committees becoming more popular, sort of seen a bit more as best practice more recently, and that's particularly in larger trusts. We also see them in place in governance structures in charities, larger charities, and also in other educational institutions. So, for example, many further education colleges would have remuneration committees, and they are also regulated by the ESFA. So this is probably where the ESFA are sort of starting to move in this direction. So I think best practice, if possible, to set one up. Obviously, within your committee structure, that can be quite difficult, and particularly if you're a smaller MAT or a single academy trust in having the number of committee members available. I think if you don't have a committee, then it's really key and crucial that you're clear where the responsibility lies within the Finance Committee, as this question raises, and within the trustee board as well, and particularly there in meeting those requirements of the Academy Trust Handbook. More focus has been on setting executive pay, transparency of executive pay, and I think it's really key that you understand and the committees understand their responsibilities in that area, particularly if you don't have that designated pay committee. So I think that's sort of our thoughts on that one. If I just take another question, I'm going to pass this one to Catherine. So the point being raised here is that the person raising the point is a trustee but doesn't sit on their Finance Committee, and as a trustee on the main board they are sometimes asked to approve spending commitments, and basing the decision really on the basis of what the Finance Committee has put forward. And really, is that good governance? Is it adequately discharging responsibilities and duties as a trustee if you're relying on the Finance Committee in this instance, given that it is more ratification? So Catherine, did you want to just take a response to that one?
Thank you. So yes, I think here we sort of looking at the role of the Finance Committee, and if we're looking at the guidance from the ESFA, it is right for Academy Trusts to have a Finance Committee and the Trust Board to be able to delegate that sort of financial scrutiny and oversight to that committee. But I think what's important is that you do need to sort of really be aware of what the Trust scheme of delegations are, and really clear, I suppose, in the terms of reference of that committee in terms of what has been reviewed by that committee, what sort of recommendations they can then make to the full board, what sort of levels of delegated authority they have. So in a number of cases, the way we see this work, obviously, to make sure that the full board is kept informed is that either the minutes of finance committee meetings would be shared with the whole board, or quite often what I'm seeing is a sort of a chair's summary. So as part of the full board papers, there'll be a finance committee chair summary of kind of, you know, the key discussions that were had at the finance committee, the key points that have been put forward to the main board and recommended. And I think as a trustee not on the finance committee, you want to be reviewing those papers, and in particular making sure that you're comfortable that there has been sufficient challenge, I suppose, as part of the discussions of that finance committee. But yes, of course, it is okay to delegate, but that then doesn't mean that you can't ask any further questions. So you don't then, as a member of the trust board, need to just, you know, accept, you know, take as read the discussions at the finance committee level. You should still, if you think there wasn't enough challenge or you don't think you've got enough information available, and you want to ask for further information, then of course you can be doing that as a trustee. But yes, on the whole, I think the answer would be yes, it would be okay to sort of delegate some of that financial oversight to the specific committee.
Great. Thank you, Catherine. So we've just time to squeeze one final question in. So Hugh, if you want to respond to this one. So the question relates to top slicing. So what is the usual level of top slicing percentage from schools required to fund the MAT? So over to you, Hugh.
Thank you. Yes, so it's actually quite a big topic, so I'm going to attempt to summarise. But there's not a standard level of top slicing that we see out there to fund the MAT. We do benchmarking on this, and you'll see anything from 1% of income up to sort of 20% of income. And the reason for that is there's different methodologies of how you do it. Some will put all of their support costs through the centre, everything will be centrally procured, and therefore that will feature with that really high percentage. At the other extreme, most things will go on and get charged back to the schools, and so they have a very low percentage, and others will have obviously something in between. And you'll see that we do a sort of benchmarking report annually that will be due out next month, which will give you some of the benchmarking around the kind of percentages we see across MATs. But it is a bit opaque because it depends on what you charge to the centre. Some things can be recharged back out to the school, so it's difficult to know what it is you're seeing with those percentages that are quoted in financial statements. So some trusts have started looking at it in other ways, so thinking what's the total cost of our finance function, or what's the cost of the finance function per pupil, whether that finance is sitting in the centre or in the schools, what is the total cost of it. So there's different ways to look at things like efficiency versus centralisation. The level of centralisation is mixed across MATs. And obviously the top slice does often drive some of that, but I would note that some of those that are at the sort of extreme end, where there's very little top slicing and very little at the centre, it can be difficult then to discharge responsibilities as a trust as a whole. Ultimately, trusts are set up as a single legal entity. The board has got to be responsible ultimately for finances, risks, the MAT level reporting. If there's virtually nothing in the centre, is the MAT able to take those responsibilities and drive the strategy of the trust? So you often do need a certain amount in order to be able to do that. Finally, what we're seeing across the sector is a bit of a mix in terms of how people are approaching it. Some are using this top slicing mechanism. We're seeing more pooling, so either pooling of reserves, that's when you're sort of pooling reserves between schools, so the money that you've got left over at the end of the year, or on the other side is gag pooling, which is permitted under the Academy Trust Handbook. So this is actually pooling the money when it comes in, and then potentially having your own mechanism for how that gets divided amongst the schools. And so that sort of thinking can be quite useful. It's becoming more popular, and it can sort of separate a bit between those sort of educational budgets and what people are responsible for that allocation of gag, and who's responsible and how you manage the sort of central support costs as well. So I think MATs are now getting more sophisticated about how they're able to analyse and plan their finances and allocate them across schools.
Great, thanks very much, Hugh. So just really in wrapping up now, we're just a couple of minutes over, so we will respond to all the other questions. There were a handful of other questions that we've not had a chance to cover, so we will respond to those in the circulation after the webinar. So we'll circulate the slides, the recording, and also the Q&A answers as well. So really just to wrap up, to say many thanks for attending today. Good to have quite a number of you attending. Yeah, and do get in touch again if there's anything further. We've got our further webinar and seminar programme that will be happening over the course of the year, so over the coming months. So do look out on our website and at our planner for the dates of those future events. It would be good to see you at those. Some of those will be in person as well, so it'd be great to actually meet people face to face again. But yeah, many thanks for attending, and we'll close there. Thank you.